Hope you had a very good Christmas holiday yesterday. And it is refreshing to note that one of your theories is proven right. This is a table published by Money Control today where they have talked about all the brokerage houses growing rapidly in this year. This has been the premises for me investing in the investment banking pack for last 3 to 6 months. Indeed, this is being a blockbuster year for the brokers, not just brokers, but all other companies associated with this particular line of business like KFinTech, CAMS, NSC and so on. Now today was the monthly expiry and it was a very strange expiry. Let me zoom a bit. So the day started with a gap up, but immediately the markets cooled down and then there was a very narrow range. The index was literally in a 50-point range for most of the day otherwise. Now, one particular sector I wanted to specifically talk about today is the IT sector. It has started cooling down very slowly, very subtly, without too many people realizing. This index was full of greens probably a week back, and suddenly you now see a lot of whites. These stocks have moved out of the proximity to their 52-week highs suddenly. Let me zoom this a bit. See TCS 10% away from 52-week high. Even the product companies Zomato, Swiggy, they are now away from their recent highs. At this rate, investors who invested in these stocks, they suddenly might get caught with about 8, 10, 15% kind of losses, and they may not be able to recover from them for 1 or 2 months or even quarters perhaps. Today was the monthly expiry and now the buying will begin for next expiry as well as for the result season and budget season. From that perspective, today I am kicking off the Q3 result particular analysis where I'll try and come up with basically my expectations from certain stocks, the ones where I'm investing or where I am planning to exit or enter soon. Today I'll talk about a lesser known bank called J&K Bank. It is already there in my portfolio and if I have money then I'll probably buy a bit more. Today's markets were better than Tuesday. The reds were less and the deep reds were gone. Adani Ports right at the top taking Nifty up, followed by Airtel, M&M, Sun Pharma and Maruti. Right at the bottom we again had Reliance, HDFC Bank and TCS number 1, 2, 3 along with Titan and Asian Paints, two of the biggest representatives of consumption in India. Next 50 also was better than Tuesday. All red stocks at the top including 3 from the Adani pack. Adani Green, Adani Energy, PFC which is the financer for them, Indigo, REC which is again a financer for power companies, Adani Power. We again have pharma at the top followed by hotels and holding companies. This is the old version of the dashboard. If you see, the biggest bull run is happening in India hotels. This stock is now at a market cap of nearly 1.25 lakh crores. As expected, the volumes across the markets are low this week. That is despite the monthly expiry today. Bank Nifty also, the volumes were low only except for SBI and IndusInd. Private sector banks were bleeding as usual. The reds are ever increasing. Only Federal Bank along with ICICI and HDFC is in green. The other big boy, Kotak Mahindra, that's just 12% away from 52-week lows, which means 2 more percent down and that will turn red as well. The bank I'll talk about in the Nugget section today, J&K Bank, that was up 4% today. One thing to note is in the public sector banks, the P's are suddenly back to 5 to 7 kind of range for many banks. No such problem for the investing pack and no problem at all for KFin Technologies, hit yet another high with rocket volumes, 8% up today also. There is something happening here which we are not aware of for sure. This is a vertical cliff, literally. There is a lot of hope in the auto sector right now. While the numbers are not yet published, they are not totally unknown to the market. So these gains may be indicating happy numbers coming up next week. Mazgaon Dock will trade ex-split from tomorrow. Post-split, you might see 2500 tomorrow. This stock was up today. Along with the big boys HAL and BL, One thing to note is GRSE has cooled down a lot. It is 82% away from the 52-week high now. Business model wise, however, I find Mazgaon Dock a lot better than GRSE, which is a lot better than Cochin Shipyard in general. Metal pack is not looking good at all. The reds are increasing. And today I was analyzing certain data and two stocks specifically, Hindustan Zinc and Hindustan Copper. They are not looking good at all for the next few quarters. In fact, I'll probably cover Hindustan Zinc in a separate video. As expected, the middle tier oil companies are doing fine right now. And we have HPCL in the green zone now. No such luck for the power pack, though it was looking good today. One thing to note is that the raw material costs have not gone up at all and the power tariffs have also not reduced at all. So why is this particular sector sulking? No problems at all for pharma companies. The graphs are looking beautiful, bunch of greens most days. Today also the volumes were good for many stocks. One point here could of course be that a lot of these companies export to the United States and rupee made a new low of course today, so they will get more rupees per dollar. The entire sugar pack cracked today. This could be for the fact that most of the products which contain sugar, they are coming under the GST hammer right now, which is not very encouraging for the sugar industry. Edible consumption was not looking pretty today. Select stocks were up. Devyani, restaurant brands and so on. Godrej hit a fresh low today. Non-edible pack was also not very different. Most stocks were red. Today, Page Industries was down 3.5%, so was Gillette. But one stock which is looking increasingly good, Trent, which is not in red, and DMart also, which after a steep fall seemed to be bottoming out. While consumption is under threat, I still feel that the selling in these stocks is a bit overdone right now. In the tobacco and alcohol pack today, Godfrey Phillips stood out 9% up, and this stock is usually not happy with just one day of run up. Alcohol stocks are doing well. This should be their best quarter in the year. The false alarm in Tata Group was caught today. Most stocks that were up on Tuesday because of Tata Capital news, they cooled down. In the entire Adani pack and its financiers, only NDTV was down 0.5%, rest entire pack was green. That too on good volumes, especially considering the time of year we are in at. Net outcome for the day, Nifty did not go anywhere. Bank Nifty also did not go anywhere. Nifty IT was literally at 0% gains. The indices which are up a bit were Nifty Energy, Next 50 and Auto specifically 1% up. FIIs continued with their business. Though the volumes are low, they still sold 2300 crores. DIs, remember, will get their purse refilled in few days from now. And a lot of people in this country which work for foreign companies, they might get their bonus amounts for the year credit also. So there will be some money to look forward to. Remember, in the next few months, there will be a lot of outflow for taxation perspective. As a result, the investment appetite across retail may be reduced, especially in the month of February and March. Yesterday I talked about Nippon AMC that may go under the hammer. Not exactly hammered, but the stock was down 2%. Also I talked about Tata Capital unlisted stock that was up on Tuesday. I mentioned that it may touch 1100 soon. Today it nearly in a day's time went to 1100. Euphoria for IPO bound stocks is huge, especially if it is a large stock from the Tata stable. My trades for the day, while there was no sell, a lot of these buys are for trading purpose. I bought Angel Broking. I might hold this for some time. I already have certain stocks of Angel Broking. Kalyan Jewelers, maybe BTST. I just thought that the charts are looking interesting. See here, optimism right at the fag end of the day. It shot up. Reasonably good volumes. There was some buying happening. Also, I bought more Coal India. I bought more of Nestle. I bought NTPC. I already mentioned that I find that power companies, the beating down seems unnecessary right now. I bought more of consumption here, Britannia, because I don't see any problem at all with Britannia consumption. Bought ICICI and I'm really liking Trent right now. TCS again for trading and Associated Alcohol. I might keep it for some time or I might just trade if it gives good gains soon. Now, first let me talk about the hypothesis. The region is lot more stable now compared to a decade back and even 5 years back. I'm sure you would know someone who has visited JNK recently, especially Kashmir, for tourism perspective, especially with snow around. Overall business outlook is turning greener by the day because people are no longer as fearful to go there as they were a decade back. And international tourism has not even started back in JNK, and I'll prove that with data. This year, in general, in the north, snowfall has been good, which is a good tourist attraction. 2020 obviously was the pandemic year, which was a low 34 lakh. Then it became 1.13 crores, 1.88 crores, 2.11 crores. Now, I was obviously not happy with this particular data point because it is old. So I went to the website of JNK Tourism and downloaded some data and analyzed it. This particular month of June is the peak season for tourist inflow, summertime. And December also, it is not very low, including January, though it is cold and it is snowy because people want to visit snow. Nothing visible for foreign at all. This is the minuscule size of foreign footprint as of now. If tourists are visiting, which is a very big contributor to JNK economy, then definitely there will be investments in creating hotel infrastructure. For example, on Dal Lake, modern shikaras will come in, and local businesses will increase spend and capex for at least 1 or 2 or 3 years till the time there is a bit of saturation, which means they are able to meet peak demand with the infrastructure. If money is circulating in the economy, then you will need banks. JNK Bank is the largest bank in that area, largest number of branches which are already there. If you look at profit and loss, this number of revenue has been increasing, especially of late. In fact, TTM is looking pretty good already. One good part to note is since all of these branches are already there, there is not too much capex or branch opening required to meet higher revenue. As a result, expense is not increasing too much. As a result, if you see, financing margin has been going up because earlier they were not even able to recover the cost of running the bank from the operations. The net profit is looking good. TTM is already 2027. If you look at the quarter results, similar pattern. Revenue 2728292931. If you extrapolate this particular number, we are talking about approximately an EPS between 19 to 20 for the year. The GNPA and net NPA numbers were not published on Screener, so I went into their detailed results, and here I saw that the net NPA has been reducing. It is 0.85% now. The GNPA also is 4% now compared to 5.3%, which is lower and reasonable. Now if you look at the EPS graph, this is courtesy Money Control. This graph is in control, not too much aberration, not too low. Revenue has been increasing slowly and steadily. PE wise, this is among the lowest PE banks in the PSUs. I would expect a reasonable PE to be somewhere around 7 for this kind of bank, and if PSU banks do well, then maybe inch up to 8. Approximately a 20 EPS into 7, we are talking about 140 as a reasonable target. I'm not talking about an optimistic target. If you give a PE of 6, then this becomes 120. At a stock price of 102, we are talking about 18% gain at the current stock levels. Now the stock is already bottoming out. One of the terrible signs of stock being below 50 DMA, 200 DMA, that has changed. In today's ecosystem, about 18 to 20% gain in about 3 to 4 months time is going to be fantastic. That is what I am optimistic about and why I am buying JNK Bank. It is not perhaps a bank at this stage which I would want to keep for 4, 5 years, 10 years. Thanks for watching, and I will see you tomorrow.